Avenues is a fintech company, and we equip or assist agri-SMEs with funding. We do it in a quite an innovative way, which we take a different approach than the current financing, which is provided in the agri sector currently in Kenya. Our approach is based on value chain financing rather than providing traditional financing or microfinancing. We serve a layer, which is a huge layer, which is right in between these businesses that are eligible for traditional financing and the businesses that currently get the microfinancing. We found out there is a huge layer in the middle of underserved agribusinesses which do not fit to any of these buckets. They're excluded from traditional financing due to the requirements and the need in collateral, the need to pledge land or any other type of assets. And yet the microfinancing is not a fit for them because the amounts are too low, the tenors are too short. These businesses, we think, and what we find is that most of the financing gap that everybody is talking about in the agri sector is centered in this big layer that we're trying to serve. Our approach is based on data. So we look at the data as the collateral. This way, these businesses can generate the collateral they need in order to get the financing. The data we use is just the normal data that any business which is operative generates, which means the transactions in the business. We look at the invoices, we look at the purchase orders, we look at cash cycles, we look at payment history to other financing or financial institutions. And this is data that is generated through the normal course of a business. So the businesses don't need to do anything special in order to generate that data that we take as collateral. They just need to share it. As if they agree to share it and it is in their best interest, we can provide them with the finance they need. And the good thing about it is that they can build it up. So even if they don't have as much data, let's say this is a relatively new business owned, by youth going into agricultural sector. They can generate that data as they go along and as they generate more and more transactions. And the more data we get, the more capital we can provide to that business. So we grow together with them. We look at it as a partnership. And we're looking for the win-win because we look at it in the boundaries of a transaction. At the end of the day, we make sure that the transaction is profitable for the business that works with us. So if a business buys stock and then sells it, they have a profit margin. The financing or the cost of the financing needs to be taken into account when looking at the bottom line, at the profit of that business. And that's what we do. So we make sure the financing that we provide is sustainable, something that can allow the business to grow and to keep on going and to get more and more transactions. At the end of the day, when the business keeps records of its history and of its transactions, a company like ours uses that record in order to evaluate the business, in order to evaluate the specific transactions that need the extra cash. And I can give an example. I think that will make it very understandable. For example, one of our products, which is the agri-supplier financing. Okay, with this product, if a business sells to a buyer, and the buyer, let's say it's a big buyer, like Carrefour or Quick Mart or any other supermarket, they usually pay after 30 days, 60 days. Now, the transaction is profitable, but the cash flow is negative because that new business doesn't have the cash. It needs the cash in order to buy stock and sell it to the supermarket. We can get in there. We can provide the cash based on the invoice that they issue to that buyer. So once they get the stock and they deliver it, we can give them the immediate cash they need to pay their suppliers. This way the business can roll on and it can go on to the next transactions. Otherwise, that business would need to wait until they get paid in order to have more money to buy more stock, to sell more stock. Everything goes into our models, which are technology-based. We use machine learning and artificial intelligence. Everything goes in there, and then that's what would enable us to provide the finance at the end of the day. Especially if it's a new business owned by youth and so forth, we would give them the guidance. So they would know what they need to do in order to generate more data, which is high quality data. And if they generate it and they work the way they should in order to run their business, their limits with us are going to increase. They're going to be eligible for more money. They'll be able to grow their business even more. So it's kind of a snowball. And it's a win-win, as I said at the beginning. And even though we provide the finance to these businesses that buy from the farmers, right? We do not provide the finance directly to the farmers end up profiting from it because our client pays on time. They can negotiate better prices. When we finance the layer above the farmers, the money ends up at the hands of the farmer because these businesses are able to buy more, they're able to stock on more goods, if we're talking about the grain industry. And then we think and we believe and we see it every day that the farmers end up benefiting from that approach of ours. So we're 100% compliant with all the local regulations. We work by the guidance and the regulation of the Data Commissioner and CBK and every other regulator which is involved in these fields. The data is not shared outside of our organization. We use it in order to assess the creditworthiness of our clients. They consent, they actively consent to us using the data in order to assess the credit limit. We acknowledge the fact that some businesses misuse data, and we know that trust is something we need to build and that the burden of the proof is on us in order to do it. And that's why we do it step by step. And we see, the examples from the ground, we see that our clients stay with us for a long time. And the longer they're with us, the more they agree to share, and then we can provide them with better services, better terms, better limits. So it's just a matter of crossing that barrier, but really it's all about. We committed to disburse 2.5 million in 2025 to the agri sector, meaning at the end of the day that much more money is going to flow into the value chains, and that would translate into more transactions. More transactions means that money flows around faster. It means that the money at the end of the day goes down to the farmer because they're able to sell more. Okay, instead of selling a certain number of stock, they're going to be able to sell more than that. And as the demand increases, the prices become more favorable, and the negotiating power of the parties in the value chain are better equalized. Okay, it kind of eliminates all the market failures, or not all of them, but a lot of the market failures that we currently see that create this gap. Now, with Kenya specifically, a huge percentage of the GDP is based on agriculture. When more money goes into the agri sector, the immediate result is the GDP increases, and it's better distributed from the small businesses all the way up to the big businesses, and everybody end up profiting from more money going in there. At the end of the day, it's about efficiency of the value chain.
We are very big on partnerships. It's very hard for one player to actually sort out the financing gap in Africa. So we believe that all actors have to come together. That's the reason why we're very keen on creating partnership, including with the government. So we've created partnerships with Kirinyaga County, and one of the reasons for that is to support the cooperatives, especially the avocado supply chain. By supporting the value chain and the cooperative, we're ensuring that the farmer is getting timely payments, reducing post-harvest losses, and timely access to the markets. We are supporting the avocado oil processors to be able to buy more avocados from the farmers. We are currently having active conversations with the county government to ensure that we have access to the cooperatives, that we can empower through our financing solutions, so that we ensure that everyone, every actor in the supply chain is supported. We are also working with Kenya Marketing and Livestock Council to support the livestock trading supply chain and the meat supply chain, because we believe, again, in partnerships and ensuring that the farmer who's trading in livestock is supported. We are working with manufacturers of agrochemicals, and one of the partners we have is FarmFix and Sustainable Management Services. Again, to make sure that that supply chain in the agrochemical industry is also supported. We do work with distributors as well, and one of our key partners, especially in Kisii County, is Enokem. And one of the ways that we've been doing that is holding events with these distributors and manufacturers. The reason we are doing that is bringing in all the ecosystem players, especially the stockists. And the main reason to do that is we want to be on the ground to listen to their pain points and be able to know how can we support them and tailor our products to fit the needs that they have in the market.